Hello, chart watchers, and welcome to this Monday, October 1st, Market Watchers live show with your hosts, Tom Bowley and Erin Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Hope everybody had a great weekend. We are starting the market or the week off with markets higher today. Dow Jones Industrial Average currently up 261 points. The S&P 500 up 19. The NASDAQ lagging a little bit on a relative basis, but still up 33, trying to challenge that late August high. The Russell 2000, though, you can see the performance in September through today, early October, really weak on a relative basis. That's continuing today with the Russell 2000 not participating, down 9 points. 10-year Treasury yield up about 0.5% to 3.07%. So kind of in between support 3.01 and that recent resistance 3.11%. We'll talk about that in a bit. Volatility down today with the buying in the U.S. equity indices. You can see the VIX now down 0.30 down to 11.82. Industrials having a strong day, up more than 1%. Materials also up more than 1%. Autos reacting to the trade agreement between the U.S. and Canada and Mexico. We'll talk about that in just a couple of minutes, but autos having a very strong day. Diversified industrials getting a little bit of a pop today from GE. You can see GE stock up more than $1, although it is well off earlier high. They had a change at the top at their CEO. We'll talk about that in a few minutes. And then Tesla back in the news. Of course, Friday had a horrible day when the SEC announced that they were going to be, or that they were filing a lawsuit against Elon Musk. Well, apparently it's been settled and everything's back to normal now. Tesla, we lost 14% on Friday, gained 16% back, and we're just about now where we were at the close on Thursday. Okay, Erin, a lot going on to start a new month, a new quarter, a new day, new week, everything.
Oh,
Crazy.
I know. It is crazy. It got here so quickly. Wow, Tesla, though. That's that was interesting. Yeah, I remember seeing all the news on it Friday, and yes, today it's not a problem. I guess they worked something out. So,
yeah, I think Elon Musk just thought that he was bigger than the market, and could just tweet anything. And I think hopefully it's a lesson to a lot of folks out there, especially these companies that the SEC is watching. I mean, you can't just go out and say that we're going to think about going private and funding is secured, because apparently funding was not secured. And the SEC doesn't take that too lightly. Although I have to say, and we'll get into this in a couple of minutes, I mean, the punishment seems to be slap on the wrist more than anything else.
Absolutely. It does sound like that. But, it's in the world of social media and all of that sort of thing. This is not something we would have seen, 10, 15 years ago, as far as an SEC, problem.
Mm-hmm. Well, it's social media is a platform.
Indeed.
Whether you're, whoever you're talking to, it can be family or friends, but it can also be shareholders. And, you got a lot of folks that are buying and selling securities based on what these CEOs are saying. And, I think it just goes to show that you got to be careful what you say. You can't just go out there and just speak from the hip.
Yes. I think that's wise. We all should do that.
Exactly.
All right, our upcoming schedule for this week should be great. Tomorrow I'll be doing the DP monthly review. I'll go over all those monthly charts that went final on Friday. Charlie Kirkpatrick will join us on Wednesday. Bruce Frazier, Mr. Wyckoff, it's been too long. He'll be here Thursday. And finally, Mary Ellen will be with us on Friday for what's hot and what's not. Today, we have a full agenda. We've got Monday setups, followed by Tom's seasonality report for October. 10 and 10 to 1. Our first symbol is going to be Photronics, PLAB. And then we will finish it up. I will be doing a scooter report at the end of the program. All right, let's get it started. I know there were some economic reports today.
Yes, there were. We had a few of them. September PMI manufacturing index came in today, 55.6. Market expecting 54.5, so a little bit of a beat there. September ISM manufacturing index, 59.8, just slightly below 59.9, which is what the market was expecting. And then you had another construction-related report that was less than expected. August construction spending came in rising 0.1%. Market expecting 0.4%. So mixed data there. And when we take a look at the 10-year Treasury yield, It's kind of, just, I think, trying to consolidate here after a huge move up. Over the past 5-6 weeks, you saw this big move from 2.81% on the 10-year Treasury yield all the way up to 3.11%. This is only a 6-month chart, so you're looking at this and saying, well, it's only a 6-month high, but actually it's a 7-year high at 3.11%. So that is a big level. We got right up to it. We challenged it and we failed. We came back down. Short term, we had resistance at about 3%, 3.1 or 3.01%, right in that area. And you can see the rising 20-day moving average currently at 3.016. So this area down in here, I think, is going to be pretty important in the short term, not from a longer term perspective, but short term, it would be very bullish, I think, for equities if the 10-year Treasury yield holds 3% and then goes back up and breaks out, because, again, it's signaling money rotating away from the defensive Treasuries. When money rotates out of Treasuries, Treasury prices drop and yields go up. Always that inverse relationship between Treasury prices and Treasury yields. So, and rates are still low. I saw something, it was an article this morning, and there was comment made that the Fed's hiking of rates likely to trigger a recession. And I just kind of shook my head. It's like, okay, rates are not that high. If we've got strong enough economy, we certainly can handle a 10-year Treasury yield of slightly more than 3%. But anyhow, it probably sells a little bit and gets a lot of views, and so therefore it must be. Anyhow, I don't believe that. I think that 10-year Treasury yield goes higher. I think that's going to be bullish for equities in the short to intermediate term. When I say intermediate term, I'm talking 3 to 6 months. Beyond that, who knows? We'll have to kind of keep watching the market. But I do think the market is set up pretty well as we head into the bullish fourth quarter of the year. All right, let's take a look at a couple of stocks in the news, industry groups in the news. This is the Dow Jones U.S. Automobiles Index. This morning or over the weekend, we had the U.S., Canada, and Mexico replace NAFTA, North American Free Trade Agreement. It does require congressional approval. It also requires approval in Mexico and Canada. So it's not a done deal at this point. But there were some terms that were favorable to certain industries, and automobiles were one of them. You can see the auto index up 5.4% today. I didn't go through and read everything in there. I do know that under NAFTA, I think it was at least 62.5% of the material in an auto had to be in North America, and now it's gone to 75%. So that's going to be good for companies like Ford and GM, Fiat, Chrysler, Tesla, and so forth. But then there was also, and I didn't get into this one too much, but I think there was an increase to the percentage of manufacturing that had to come from higher wage factories, where minimum wage, I think, is at least $15. So that was a little bit of a negative for these autos, but I think the net was a positive. I think that's what the market is saying here. So we do have the autos moving higher. And, of course, Tesla with their news out about the settlement with the SEC. By the way, they said that Elon Musk could remain CEO. They just said he couldn't be chairman for the next 3 years. Well, I'm not sure what that really does. If he's still CEO, he's still running the company. So they really didn't do much. There were rumors recently that the SEC was going to try to strip him of being able to be an executive for any publicly traded company. And that's a long way from what they ended up negotiating with him in terms of allowing him to remain CEO. But anyway, Tesla rebounded pretty strongly on the news. You can see the huge gap down on Friday, and then we came right back up today. GE, I tell you what, if there's ever a slap in the face for the job that you did at a company, it's, I think GE's the poster child. John Flannery, who was the CEO that replaced Jeffrey Immelt back in August of 2017. Let's take a look at this longer-term chart. But when we look at a 3-year weekly chart, since Flannery replaced Immelt, you can see back here in August, GE was about a $24 stock. It was down to 11 and change last week at the close, had dropped more than 50% under Flannery's watch. And apparently GE didn't like that, and they ousted him this morning. And so he was not CEO for very long, but the market, pretty big gap up in GE today on the news that he was ousted. So I guess that's the market saying we didn't really like the job you did, and as a result, we're going to bid the shares up when you're gone. But he is being replaced with board member Larry Culp. We'll see what happens there. I don't usually get excited about this kind of a change. we really need to see things changing in terms of both technicals and fundamentals. And currently, you can see GE has been in ski slope mode in terms of their chart action for the past couple of years. And really, I mean, we could take a long-term look. It was really under Jack Welch's watch that GE did so well. We could go all the way back. Let's go 40 years, all the way back to the early 80s, late 70s. I mean, this is when I think Welch became CEO maybe in 1981, and he was CEO until 2001. That's what you want to leave as your legacy. Since then, we've never seen the top over the last 20 years, 17 years, even though the market has moved all-time highs. So GE's just been a relative laggard for a long time. That's why I think you got to give it time. I mean, if you're a bottom fisher, feel free, but that's just not something I would be interested in doing. Let's see, Facebook on here's a shocker. Facebook on Friday came out and said that that there was a very serious security issue that could affect 50 million accounts, and the stock got hit on Friday. It's down again near the low. It rebounded earlier today, but it's now trading down. Really watch this 160 level. I think from a longer term perspective, and I've said this before, I think Facebook's in trouble. That was a big move down on heavy volume, losing its moving averages. I think we've now moving down or potentially heading down to test this 150 support level. And maybe we bounce at that level for a bit, but that would be a really significant long-term head and shoulders topping pattern. You want to be careful with Facebook. I don't think it looks very good technically, and I would stay away from it. Okay, Erin, a lot of news. I know there were several upgrades and downgrades. What are those stocks looking like on this solid day, at least for the Dow Jones and the S&P?
All right, let's look at it. Yes, quite a few today. I'll try and go through them pretty quick. I was able to annotate most of them. In fact, I was busy annotating one right there. All right, let's go ahead and we'll look at some upgrades to start off. Integris, Deutsche Bank upgraded this from a neutral to a buy. I am looking at this. I see a PMO that is turning up. Of course, we had a fake out. That happened earlier, but now we have an upgrade to go with it. So that, I think, will show us that the PMO will come back up. And this is in very oversold territory. Obviously, when you look at where it's been above that zero, mostly above that zero line for quite some time. So I like this on the upgrade. It didn't even have to go down and test this support area completely. And now it does look like it's headed back up. I would be looking for a move up to that $32 area where we have resistance right here at these lows from May and June. Could move even higher, though. You've got some tops back here from November, December, October, November, I should say, that would bring us up to the 33 level. So I think Integris is looking pretty good on the upgrade. Logmel, LOGM, Oppenheimer upgraded from a perform to an outperform. Clearly, investors are liking that. We now have a PMO that is above zero. This is a bearish rising wedge. And instead of breaking down from it, as would be expected, and testing probably that support level down here at about 75, instead it broke out. Now, of course, it is trading. It's back trading within that wedge. But I would say on the upgrade, that's pretty positive. And you've got the 20 coming up to meet the 50-day EMA. As long as it stays above that 20, I think you're in pretty good shape here. I would be looking for a closure of this gap, and that would bring us up to about 102.50 for LOGM. M&T Bank Corp, Evercore upgraded it from inline to outperform. I'm not liking this chart. I don't care that they upgraded it. I've got a 50 crossing below the 200-day EMA, and that is telling me we're in a bear market configuration for MTB. We have a PMO sell signal, and it is moving into that oversold territory. However, it's not quite there yet. Look at the volume on the OBV. It's broken down below these bottoms that we had since about mid-August. So I appreciate the fact that Evercore gave it an upgrade, but I certainly don't like it the way it is now. It is sitting on that support level, but I don't think I'd take a chance on that one. BMO Capital, UPS was upgraded, perform to outperform. Nice little gap up today. You can see the PMO in the thumbnail right here trying to turn back up. That 20-50-day EMA negative crossover is lined up. Of course, they are EMA, so if we can get a close above the 50 and of course above the 20, then we don't have to worry so much about that negative crossover. And the PMO is in line here with that. It's trying to scoop up now on this really nice gap up today on the price action that we're seeing. So UPS is looking pretty good. I would just be a little leery because we do have these tops back here in July and August that could be a problem when we get up there. And of course, right now it's testing overhead resistance at that 20-day EMA. So something to watch more closely. AMD was downgraded today by Robert Baird from an outperform to a neutral. I think there's good and bad news on this chart. We are in a declining trend channel, which is bad news. We have a PMO sell signal in overbought territory, which is bad news. OBV is moving lower. So what's the good news here? Well, obviously the scooter remains very high, AMD at the top of the class with a 99.9. And you know what I don't know. I see a possible flag formation here, a very large flag. If we get that breakout to trigger this as a flag, I think you could see a really nice upside move. We might have to test, we might have to move a little bit lower in this channel first before we get that breakout. And I say that just really based on that PMO sell signal in overbought territory. But I know, I think AMD might have a shot here at a nice breakout. And notice that it was up 2%. On the downgrade. So investors shrugging that one off. Chipotle has been downgraded by Oppenheimer from a perform to an underperform. You can see the 20-day has just now, well, it looks like, yep, has just crossed below that 50-day EMA. That gives me an intermediate term trend model neutral signal. PMO is now in under 0. Not too much good to say that is good here. It is possible it's holding on to this area of support here at these lows, that top back in May. But I would suspect, given the downgrade, I would look for it to fall down and test that 420 area at the 200-day EMA. We've got two more, F5 networks. And the investors certainly didn't care for the upgrade here, or I'm sorry, the downgrade. Piper Jaffray, neutral to underweight. And as you can see, we've got that rising trend channel, big giant drop below that, and is now testing the 50-day EMA. I would look for it to test at least this 180-250 level. So you've got the PMO now on a sell signal with this big giant drop of 5% on F5 networks. I like the AMD chart far better. Another downgrade for you, Lam Research, LRCX. This one was downgraded from a buy to a neutral. I decided to pull this up on a weekly chart because, as you can see, as far as the year goes, we didn't have a support level to mark. So I figured it would be a good idea to move on to that weekly chart, which is quite ugly. We've got a rounded top here. You don't want to see those, especially at the end of a big run to the upside. We drop below that particular area of support. I think you could make a case for some support here at that low from back in the end of, it looks like April, May, June. Yeah, at the end of June. And, you know, but it's kind of a lightweight support level, I would say. It really only lines up here with that one bottom. You could be in for a really long move to the downside around 80, but we are seeing an oversold PMO on that weekly chart. So that's good news there. And that completes the upgrades and downgrades for today. Tom, are you ready to do your, or actually it's time to do our Monday setups first, right?
It is.
All right. Well, let's go ahead and start taking a look at what we got there. And I went ahead and here are the last weeks that we had. I had UVE at 47.50 and you had Lazy Boy at 31.95. So let's go take a quick peek at those charts if you'd like to.
Yeah, I'd rather not, but let's do it.
Yeah, I think I came out ahead here. I was in at 47.50, as we were saying. Currently, it is trading at about 48.13. It had a really great Tuesday of last week. And then Wednesday, I was feeling pretty good about my pick. And then, of course, it went for a pullback, close that gap that we had. And now it could be heading lower toward the support level. So very short term buy. And then you've got the PMO that has topped here. So for a short term purchase, I would say I would be out at this point, take what I can get. And then you had Lazy Boy. Here we go. Yeah, not a good week.
Yeah, it's down probably about 1%. I think the volume has definitely come out of it since the huge volume move earlier back in August. Mm-hmm. And so I think we're kind of going back down testing that area, but we're down. Actually, it's down about 2%. It was up. It was probably about 31.65 when I was looking at it earlier. But yeah, it's probably down about 2% since last Monday. I'm keeping
big move on volume though. That looked good this in September when you picked it.
Yeah, I mean, it was starting to I thought base out. I'm still not sure it's not basing before a move to the upside, but I'll keep a fairly tight stop on this one. I certainly don't want to see it going down below 31. I don't like it actually going down below that low from about 2 weeks ago. So, it's got that triple bottom all the way back into July, but I wouldn't want to see it go back down that far.
All righty. Let me go through my setups very quickly here. So before I go through these, I do want to tell you, and I did not put them as my Monday setups, but my scan did come up with Apple and Amazon today as possible buys. So if you want to get into one of the big names, today may be the day. I didn't pick it just because I didn't. I thought these other setups looked a little bit tastier, and for the exercise that we do with Monday setups, I opted not to pick those, but you might want to take a look at those charts. Clearly something interesting is brewing there. It wouldn't have come up on my scan. So biotelemetry, this one was one that came up, and one of the things I like about it, I almost picked this one if I recall. You've got the breakout above this area of resistance, and now it's kind of coming back a little bit down after that breakout. It did trade intraday above $66, so I like this little pullback on it. You've got the PMO getting ready to give you a buy signal in near term oversold territory. Near term meaning it's near these lows that we saw, rather than, I'm not looking at this low over here. I'm looking near term. It is a low, oversold low, and it is starting to move up to the upside. Callaway Golf. This was also I was really close to picking this one because you do have that breakout, and you can see that we are coming back toward that breakout point, and that's when I think it's great to be able to pick up a stock. I just opted not to pick this one. You'll see why. But you can see with the OBV, we're now starting to pop up, and you can see it even more clearly in the thumbnail. OBV is now above previous tops. So I like that setup, even though we're getting the pullback right now. Again, I think that's kind of an opportunity when you see those breakouts and then the pullback, because we're always saying, hey, wait for it to break out. But you want to wait for it to break out, but then that may not be the right time to get in. So when you start seeing it pull back and it's been on your watch list, that's always a good thing. Tactile Systems Technology, TCMD, was also one that came up. I've got a nice PMO rounded bottom. You can see the OBV is pushing upward. It hasn't quite gotten above previous tops though, which is one of the reasons I wasn't excited to put it in. Also, we got that pop on Friday, an intraday pop above overhead resistance here at that September top, but we fell back down, and now it looks like it might struggle with that area of overhead resistance again. But the PMO is still looking pretty healthy, as is the OBV, so might get to follow that through and get that breakout to actually occur. Targa Resources, TRGP, nice breakout. You can see I thought this one looked pretty good. You've got the PMO, looks like just about on a buy signal. OBV wasn't quite as exciting, I didn't think, as some of the others that I had, but a nice breakout move here. You can see if you wanted to make a case for a ascending triangle, you could, but that would mean price got way too close to that apex, so I opted not to put that in. But a nice breakout move here. It is already up 2% on the day, so not a selection I would do for Monday setups as my pick. HCA Healthcare. This is my pick for the week. We will see how it does, but we have an almost PMO buy signal. Nice move slowly to the upside. You'll notice with HCA, the PMO doesn't bounce around. It's not that noisy. When you get these crossovers, they tend to be clean and they tend to be fairly accurate here. So that was why I liked this one as my Monday setup. And I think this one might not be a bad intermediate term trade as well. So if I were setting it up as more of an intermediate term trade, I'd probably set my stop around 128, maybe even down to 125, because I think this one is going to run. Healthcare is now seems to be the hot sector, at least if you read John Murphy's message over the weekend. And so I have it listed as a buy at 139.60, but it looks like I have to go in at 139.88. So that's what I have for my Monday setups and my pick HCA at 139.88. So I will update this chart right now so I know that I have the right price in there.
All right, sounds good. I'm going to go ahead and move on so we keep this thing moving. I'm going to go ahead and stick with the chart that I put in my blog this morning. It's just, my style. I like to get these stocks when they pull back after they've had huge runs, and then just kind of sit back and wait, be patient, and hopefully make another run at the recent highs. And I think that's kind of what Synopsys looks like to me here. We had a huge gap up, very heavy volume. Back in August, they reported better than expected revenues and earnings per share. On August 22nd, the next day, you see the big gap up from about 94.5, 94 and 3/4, something like that, up to about 99. We kept running. We went up to about 102 over the next 3 days. You can see the volume kind of started dissipating. And at that point, the stock settled down, and now we've been seeing some selling. And some of the smaller software stocks definitely are not performing very well today. I think we're seeing rotation because of the agreement between the U.S. and Canada and Mexico. I think we're seeing a lot of rotation today back into some of the stocks that where there was a lot of fear. So I'm not too concerned. I think this is going to be a short-term issue, and I think it could set up some nice opportunities. So SNPS, current price 98.35. I'm going to go with it here. In my blog, I think I had noted a couple of areas. You've got the top of gap support, which is about 98.75 or so. Then this tail, this is where the sellers kicked in after the open with earnings, but only got down to about 96.5 or so and then turned back up. So I think you'll see some buyers down around that level, and you've also got the 50-day coming in. So I think this whole area from 96.5 to, say, 98.5 is kind of an accumulation zone for me. My target would be up around 103. You could keep a fairly tight stop underneath this tail, or if you wanted to create a further entry lower, you could use the bottom of gap support down around 94.5, 94.75, and then maybe keep a closing stop beneath that level. It's hard to say. I mean, sometimes these stocks go down, hit the top of gap support, bounce. Sometimes they go down the tails. Sometimes if the 20-day happens to be there, you'll see them bounce off the 20. Sometimes it's the bottom of gap support. So I just treat it as an accumulation zone and try to really look for reversing candles. That normally is what gets me into a stock. At this point, I don't own SNPS, but I am watching it closely. So we shall see. A couple of other stocks that I put in my blog this morning as my Monday setups. FDC, I think this is a stock that looks kind of interesting to me, down around this 24 area. That's where we had gapped up on some volume at the end of July, came back down, held 23, kind of traded in this 23, 24 range for a while, and then picked up, broke out, went up to about 27. I think now it's working its way back down. You can see we were very overbought. We've worked the RSI all the way back down to 40, which is typically a pretty good area to get into a stock during an uptrend. So I'd be looking for a reversal on FDC. I did like the candle on Friday. So even though we were down today, I think the fact that we did put in a higher high from Friday is a short-term positive. We'll see whether or not we can hold the recent lows. But I think the 23, 24 area looks pretty interesting here. YEXT, Yext Inc. This one put in a hammer with a tail just below the 50-day moving average, down close to 23. We're returning back down there. Again, currently down almost 2% today, but I do think this is an area of pretty good support between 23, similar to FDC, between 23 and $24. So I think that the reward to risk here is set up pretty nice. You got a double top 27. That would be a target. And I'd keep a fairly tight stop here, especially if the volume picks up and you lose $23. Williams-Sonoma, this was the other one. I actually own this one, and this was the one I was thinking about for my actual pick for this week. But I'm going to stick with trying to stay away from the stocks that I own because I had a couple of rough weeks, so I don't want to do that anymore. But I do like WSM. It was a huge move up on Williams-Sonoma with its earnings. Got very overbought in the short term. You can see the RSI went up over 80. I think it's just pulling back, consolidating. I expect it to make another move to the upside. I think the breakout here above 64, which was that previous high, we need to get back down into that area. But 64, 63, something like that. You can see the gap support down here just below 63. That should be pretty good. Two more real quick. BGG, which is Briggs & Stratton. You can see that the gap support from the gap up down to where it gapped up from 18 and a quarter to about 1950, a long tail in that area as well. I think we're moving back down into that range. I love the volume that came into this stock on the way up. So I think the lighter volume on the way back down is going to present an opportunity. And the last one, GNRC. This is one I have owned. After earnings, when it came back down near gap support, I had it very briefly, took a quick profit. I'm watching it. It's actually come all the way down now to test the bottom of gap support. So I like this one near the current price. Anything down below, say, the 50-day on a closing basis, I'd be careful. Otherwise, I expect it to head back up to 60, 61. And those are our Monday setups for this week. And here is the summary slide.
We'll see how it works out this week.
Yeah, I'm going to try and end my losing streak. I think you've had the best of me here the last 3 or 4 weeks, so I got to get something rolling here.
Indeed.
Okay, well, we are going to move on to seasonality. I'm going to try and give you a pretty brief summary of the seasonality and some of the things maybe you can look for as we head into the month of October. So the first thing I'm going to do is I want to talk a little bit about the S&P 500. So I am going to show you a chart first. And you can just look at the chart while I go through some of these numbers. But I want to give you a little history. First, the S&P 500 since 1950 has ended October above where it began October, 41 out of 67 years since 1950. So probably was that better than 60% of the time. We've seen the S&P 500 close October higher than it began. So we've got the odds. Bulls have the odds on their side as we move into the month of October. The annualized return for the S&P over those 67 years, 11.08% during the month of October. That ranks October 7th out of the 12 calendar months for the S&P 500. On the NASDAQ since 1971, the month of October has risen 26 times. It has fallen 21 times. It has an average or an annualized gain during October of 10.2%, which ranks it 6th out of the 12 calendar months. The Russell 2000 has been kind of strange. Since 1987, 17 times higher, 14 times lower during October. Annualized return only 4.39%, and it ranks 8th of the 12 months. I'm going to talk about that annualized return because we see October starting off weak for the Russell 2000 again. And this is kind of the norm. For some reason, the Russell 2000, especially early in October, does not like the opening 10 days or 9 days. But I'll talk about that in just a second. But notable periods within October. Let's first talk about the S&P 500. October 1st to the 6th. Annualized return on the S&P 500, 38.31%. Pretty bullish. 7th through the 21st just kind of goes back and forth. But the 22nd through the 27th is the worst week of the year historically on the S&P 500. Annualized return of minus 41.24%. And when you consider that the S&P throughout the year averages going up 9%, that's the annual average or average annualized return over the last 67 years, 9%. That week, October 22nd to the 27th, has an annualized return of minus 41%. So that is 50 basis points below the norm. So definitely keep that in mind. I think what happens is you normally have a pretty solid pre-earnings run-up in October. And then once all the companies start reporting, it's a buy on the news, or excuse me, buy on the rumor, sell on the news kind of phenomenon. But once you get past that week, then we start turning back very bullish into periods that tend to be very bullish. On the S&P 500, October 28th to November 5th has an annualized return of 66.72% over those 9 trading days. So once we get past that bearish period, we do tend to pick up. And again, that kind of fits with the overall theme throughout the year, where we tend to see the end of the month and the beginning of the month do very well. End of October to the beginning of November tends to be incredibly strong. Russell 2000, I'm not really going to talk too much about the NASDAQ. NASDAQ lines up very similar to the S&P 500. But the Russell 2000, October 1st to the 9th, minus 65.01% annualized return since 1987. That's over the last 3 decades. Definitely the 7th, 8th, and 9th is the worst part of this period. But the 1st to the 6th, which normally in most months for most of our indices are strong, for some reason not strong on the Russell 2000. And we're seeing October open up weak again on the Russell 2000. So just something to keep in mind. The 10th to the 21st, though, all of a sudden the light switch goes back on for small caps. Russell 2000 over that week and a half, annualized return of positive 45.36%. Then we get into that bearish week, October 22nd to the 27th. Small caps annualized return minus 47%. Actually, I should just pull up the Russell 2000 while you're listening to that. And then finally, to end the month in October, the Russell 2000 from October 28th through November 6th has an annualized return of 76.5%. So we've definitely got some ups and downs for small caps in October, but we are currently in a down period historically. Now, technically, you can see the Russell 2000 has been going down most of September into this first trading day of October, and it's doing it while the S&P 500 has been rising, and the Dow Jones has been rising. Dow Jones just recently went to an all-time high. So it's kind of weird, but at the same time, it's kind of following the historical footsteps where small caps tend to lag, especially in early October. Okay, so let's move on now to the sectors. I'm going to show you the seasonality, and I'm going to pull up the XLK and show you some of the groups that perform well. First, I can pull up the XLK, just give you the absolute performance, seasonal performance, and you will see that over the last 20 years, the XLK really likes October and November. Average is going up 5.3% just in those 2 months over the last 2 decades. So that is pretty strong, but I'm going to show you the relative strength. So if you pull it up relative to the S&P 500, you will see that over the last 20 years, October has been the best relative month for technology stocks. It's outperformed the S&P 500 by 1.7 percentage points during October over the last 20 years, and it's outperformed the S&P 68% of the time during October. So technology tends to do really well in the month of October. So we're going to keep that on our radar. XLC, that's the new sector that includes internet stocks. Internet tends to do really well. This is only over the last 12 years, but you can see relative strength, 1.6% in October, but it only does it 50% of the time. So the last 12 years, that means the XLC has underperformed the S&P 6 of those 12 years, outperformed 6, but the average outperformance is 1.6%. So that tells me that when it outperforms, it tends to really outperform. When it underperforms, it just tends to kind of underperform a bit. XLY, let's talk about the consumer discretionary stocks. Because over the last 2 decades, you can see some pretty good outperformance starting in October through November and even into December. So fourth quarter tends to be very strong for consumer discretionary. And then lastly, I want to mention the materials, because materials tend to pick up in the fourth quarter as well. And here you can see outperformance in October, but even more outperformance in November and December as we get later into the fourth quarter. So these are the 4 that tend to perform pretty well on a relative basis. I'm not going to spend a lot of time on underperforming groups just because we have a lot to cover, and I'd rather give you what's outperforming. But here you can see XLU underperforming in each month in the fourth quarter. And then also, surprisingly, maybe a little bit, healthcare doesn't like the month of October. And that's been one of our leaders but you can see averaging down below the S&P 1.1%, which is easily the worst month of the year in terms of relative performance for healthcare. So a lot of gains in healthcare recently. Based on seasonality, it might make sense to maybe book a little bit of those profits. Okay, let's move into industry groups. So let's start off with technology, because there are a number of groups, a few groups that tend to do pretty well in technology. The one I really want to focus on, though, is the computer hardware group. If we pull up computer hardware and just look at it from an absolute basis, look at October. It averages 4.7% in the month of October. And when you look back, it's about double any other month. March, 2.4%, August, 2.4%. Those are the highest outside of October. October, 4.7%, very strong. So you definitely want to be thinking computer hardware. This has been a strong group anyway over the past 3 months, and I think it is poised to continue to do well in the fourth quarter. One other group in technology, let's take a look at the software group. Doing okay, or was doing okay today. But if you take a look at the fourth quarter here, especially in the month of October, averages almost 5% and goes up 83% of the time. And that 5% there, looking across here, just swamps any other month. So I think computer hardware and software, we still need to keep on our radar within technology as we go into October. If within the consumer discretionary area, I wanted to go through and show you footwear, which tends to do pretty well, does well in September. But look at the October and November, jumping up to moving up more than 3/4 of the years. 2.8% average return in October, 3% in November. You can see footwear tends to end the year pretty strong. So footwear we want to keep on our radar. This was an interesting area, the restaurants and bars. When you look across, you can see that October and November all of a sudden pick up pretty strong after kind of a lackluster summer. And we had lackluster summer for the most part in the restaurants. But on the chart, it looks to me like the group is actually beginning to strengthen. And you can see breaking out to multi-month highs here in the second half of September. So this is a group on this pullback that might be worth a shot. The problem I had was finding individual restaurants that did well. But there is one I'll mention in just a little bit. And let's take a look at the XLB. And I'm going to look at the DJUSCC. So DJUSCC, which is your commodity chemicals. And if we go back, you can see October and November tend to be very strong. And the group got off to a good start today. So we want to watch, because October is the strongest month of the year as we look across here on an average return basis, and tends to be followed up by strength in November as well. And let's see, the last one was in the communications area. So let's pull up the internet stocks. Now, I'm not a huge fan of internet technically, but it's hard to ignore their performance in the month of October, where they have averaged over the last 18 years going up almost 10% per month. So if the technicals begin to strengthen, just keep in mind that October tends to be a very strong month for internet stocks. Okay, so before I get into some individual stocks within a couple of these industry groups, I do want to just show you the Dow stocks that tend to perform really well in the month of October and into the fourth quarter. Goldman Sachs. And I bring this up because the Dow is outperforming right now. So as long as the Dow is outperforming, we might want to keep certain stocks in mind, at least from a seasonal perspective. Goldman Sachs has averaged going up 5.1% during the month of October over the last 20 years, easily outperforming all the other earlier months and even outperforming December, which is pretty strong. And it's gone up 84% of the time in October. So I think Goldman Sachs is a stock definitely to keep on your radar. Dow DuPont. I think Dow DuPont was getting a lift earlier today. But you can see averaging moving up more than 5% in October, up 74% of the time, and only April has a better monthly average than October. But you can see it, the consistency in October is very strong, with Dow DuPont moving up 74% of the time. Intel, talked a lot about Intel, hasn't been very strong company lately. the stock anyway. And October, average is going up 6.2%. It is by far the best month of the year for Intel and goes up about 2/3 of the months, 2/3 of October's. So Intel is one to watch, especially if it begins to strengthen technically. 3M. 3M, look at October and November. November has gone up 19 of the last 20 years, and October hasn't been bad either. These 2 months combined, the stock is averaged going up 6.8% over the last 20 years. Little, stodgy 3M really loves the months of October and November. Microsoft, I can tell you, loves, and that's one of the reasons why software does so well in October, because Microsoft does well in October. But here is the October of the last 20 years. It's gone up 80% of the time, and it averages going up 6.5% per year in the month of October. And then the last one I wanted to mention is Travelers. Again, these are all stocks in the Dow. Travelers, you can see up 6% on average over the last 20 years during the month of October, and it's gone up almost 90%. So these are stocks that show a lot of seasonal strength. So what individual stocks, based on some of the industry groups we looked at earlier, and what I did here, by the way, just to give you an idea, so that maybe if you want to go back and look at these areas, you can do so. I went into sector summary. I went into technology, and then I pulled up computer hardware. This gives me all the stocks, and then I sorted by scooter, because I want stocks that are technically sound that also do well. And then I just started going down and hitting the seasonality for each of these stocks. Network appliance was a very strong seasonal performer, and this has been a great performer of late. But look at the average returns over the last 20 years in the fourth quarter for network appliance. That is about 20% per year in these 3 months, October, November, and December. Definitely a stock you want to keep on your radar, especially if you get a pullback. The stock has a very strong track record in the fourth quarter. Apple. I didn't mention Apple as one of the Dow components because I'm mentioning it right here. But Apple also, look at October and November. Over the last 20 years, it's averaged 11.5%, 7.5% in October alone. Clearly the best month of the year for Apple. Another company in this space that you may or may not know of, but this is PC Connection, CNXN, and we drag this back 20 years. It averages going up 8.8% in the month of October, and that's followed up with a 4.8% gain in November, and you can see the consistency is pretty strong. These are the two highest percentage months where the stock has actually risen during the month. 68% October, 63% November. Another great looking stock. LOGI, which is Logitech, and here you can see over the last 20 years, averaging 7.5% in October, 4.6% in November. So all of these stocks carry scooter ranks that are like 70 to 80 or maybe higher. So they're going to be fairly strong technically ranked stocks in addition to entering a strong historical period. So that's why I wanted to point these out. Last one I wanted to point out here is MRCY in the computer hardware space. October, look at the 68% going across here, October, November, and December. And look at these gains. We're talking about 23.5%. This stock has averaged gaining October through December over the last 20 years. Pretty powerful numbers. All right, let's talk about the commodities. PX, Praxair, that was in the news, by the way. I think Chinese authorities approved their deal with another company. I think it was an $83 billion merger they approved over the weekend. But the stock doesn't have those big, huge returns that I was just talking about, but you can see does tend to do pretty well in the fourth quarter. And the reason I wanted to mention that is because it was breaking out earlier today with heavy volume, already traded over 1 million shares, taking out a triple top. So if we're getting a breakout and we know that the seasonality is pretty strong, I just wanted to mention this as a possibility. And then the one that just tends to do really well is CE. And going back over the last 14 years, you can see it's been up 13 of the 14 years, and it averages going up 5.3% in the month of October. One restaurant stock I promised earlier that I would mention, and so let's bring this one up, DRI. Again, over 20 years, these aren't huge numbers, but we're not talking about the huge growth technology stocks either. We're talking about a restaurant bar. stock, but Darden Restaurants has averaged going up more than 7% in the fourth quarter alone over the last 20 years. And I know that it came out with good, strong earnings, has been trending lower. So you might look for a reversal on Darden, but here it's been moving lower. This was the earnings. It gapped up, was trading up over 122.5. Now it's moved down below 110. It's getting close to key support down around 105. I just wanted to mention it. It does tend to have a pretty good track record in the fourth quarter, and it has been selling off and moving back closer to key support. So that's essentially what I had to go over today. So let's bring up a summary for October. And I went through, gave you the various indices and their monthly rank, how each of them do in the month of October. Talked mostly about the leading sectors and leading industries, not so much lagging, although you do want to be careful, maybe a little bit careful with healthcare, which has been on a roll, but typically, historically, does not like the month of October. And then I gave you a number of individual stocks, I don't know, probably a dozen or so to keep an eye on. So hopefully that was worthwhile, and hopefully it'll result in some profitable trades for you as you go in through the month of October.
Excellent presentation.
Yeah, I was trying to squeeze a lot into about 20 minutes. I think I did it.
Yes, I think you did. I think you did it in exactly 20 minutes, actually.
Yeah, so did what I could do, but I know we got 10 and 10. I never want to miss 10 and 10.
Yes, no. Our viewers would be very anxious and upset probably if we missed the 10 and 10. We've actually had people request having a 20 in 20. I don't think I want to do that, but interesting. Here are the list of requests. It appeared to me that most of them, of course, are really between technology and cyclicals, although pretty interesting, you know, seeing all of those new XLC members sitting in here as well. So I think it'll be an interesting 10 and 10. I'm going to go ahead and pass it back to you to do PLAB.
Yeah, Photronics. Yeah, this is one that came out. It's on my strong earnings chart list, so I like the company. Big gap up, heavy volume. Went up over 3 days. You could see on very strong volume from under $9 to almost $11. So you're talking about almost a 20% move in 3 days. I don't like to chase, and I think this chart helps to explain why I don't like to chase, because the stock has been moving lower pretty much ever since it hit $11. But it is now moving down. Instead of having an RSI up in the 80s, we now have the RSI down in the 40 to 50 range, which I like. And I think the support zone is about 930 to 960. And today's low is 962. You can see recently we've been trading in this area. So I think that the reward to risk looks really good in this area. It doesn't guarantee you a profitable trade, but I do think that the reward to risk is solid. PPO is sitting almost squarely on the zero line. Many times a stock that has been performing really well. When it consolidates, you can see right before its last earnings move, it had kind of rested right on that center line or pretty close. But this just kind of tells you, okay, all that momentum and hype and all is kind of gone out of the stock. And now it's trading a little bit more normal. But I think that there was accumulation back there. And I think as soon as we get through this consolidation period, I think PLAB goes higher. So I like the stock between 930 and 960 on the long side, with a target up around 1080 to $11.
All right. PLAB. That sounds a lot better than PLAB.
Yeah, there's that. What is that one symbol? GLOP? I think GLOP.
Yeah, there's a lot of different ones. Yeah, GLOB. I think that's the one.
GLOB. Okay.
GLOB. Okay, well, our next one, the most popular in the chat room right now, is T-Doc.
All right, T-Doc. This has been a great performer. Look at the volume still coming in on yet another breakout. PPO's pointing up, looking good. You got some solid momentum. I would just simply be waiting on a pullback. I mean, I think this has been a great performer. We could probably even draw maybe a trend line to connect these lows to give us maybe some idea of where we might see a pullback at some point. And that's close to where we just kind of broke out from. We go to the recent high right here. You can see all this sideways consolidation. We break out, pull back, then break out again. So I think down, the closer it gets to 80, actually, the better I like the stock. So I'd like to see a little selling. But I think the overall chart looks good. And I think as close as you can get it to this trend line, I think that improves your reward to risk. So I like T-Doc.
All right, excellent. The next one I have for you is Pandora, P.
Yeah, they were just bought, weren't they, by Sirius? I think it was Sirius XM.
That wouldn't surprise me.
Yeah, I think that's where all this volume just came from. So, and now it's probably moving with Sirius, I'm guessing, because I think it was a stock deal. Yeah, so Sirius went down, bounced a little, and then went back down. And so if we go back, we'll see probably a little bit of a bounce. There's a bounce. Now it's turning back down. So Pandora, the thing is with this stock is you're going to have to kind of keep an eye on Sirius because it's going to trade along with Sirius now that it is a stock deal. If it was a cash deal and it was $10, it would just sat up here at $10. But it was a stock deal for $10. So initially it goes up to $10, but then based on whatever Sirius is doing, the shareholders are going to probably get a certain percentage of shares or certain they'll do some kind of a ratio where you exchange your Pandora shares. And so as Sirius drops, you're going to see Pandora drop. So really, if you're trading Pandora, I think what you want to do is kind of follow what's going on with Sirius. So I'm going to go ahead and pull Sirius up. Hopefully I don't have the companies wrong, but I'm pretty sure that
yeah, actually, I just looked it up, and Sirius is buying Pandora in a $3.5 billion all stock deal.
Yeah, so you got to follow what's going on with Siri, and Siri just broke down technically below, at least in the intermediate term. And so I think you've got a little bit of support here. That's where we went down to after the deal was done. Also, kind of coincides with some of these lows over here earlier, about 6 months ago. So I'm going to say in the near term, you got to watch the. I would also say this gap resistance in the 20-day. So I'm going to say 670 to the upside and down closer to 615 to the downside. I think that's the range on Sirius. And as that fluctuates back and forth, I think you're going to see something similar with Pandora.
All right. What do you think of this consumer staple, Sprouts Farmers Market, SFM?
Yeah, I think it's a good performer. I love when a stock goes up on heavy volume, the PPO strong, and it comes down and tests its 20-day. So I think as long as it doesn't close below, say, 27, maybe 26.90, I think it's a good short-term trade here. So I like it right there. That's where we kind of reversed back up. Had some good volume on that reversal. I think we can trade all the way back up near the top of this range. Certainly the candle body high. I'm going to say 29.5 is a target. Stock's trading at 27.26, so I can look for maybe $2 to the upside and maybe 30, 40 cents to the downside. So my reward to risk here is pretty strong. I like SFM. If I was getting in, it would be on the long side.
All right, this one's sitting on some really interesting gap support. It looks like it closed the gap. Shoe Carnival, SCVL.
Yeah, this one almost made my list for today's
setups.
Setups, yeah. I was looking at it. I had about 10, and I had to narrow it down to about 5 or 6. So this one ended up not making the cut. And the primary reason it didn't make the cut is I'm waiting for it to get down all the way down to this gap support level. So we had the big gap up. Black candle really struggled to get above that high that day. So a lot of times when you see that black candle, you tend to revert back to the downside as opposed to a hollow candle, which sometimes you never get back down to the gap support at the bottom. But this one, I think, could get back down to around 37. You got the 50-day coming up from underneath. I think eventually it's going to make another run back to 44, very similar to what we've seen in the past from, I don't know, DSW, which I probably shouldn't bring up. That's the one that I got out of too soon, and then the stock took off. But many of these stocks, after gapping up, do go back, fill the gap, and then start to run again. So that's the range right now I would be watching on SCVL. And I think the reward to risk is set up nicely at current price, but even better if it happens to get down closer to 37.
Okay, the next one is Callon Petroleum, and that is CPE.
All right, CPE. Definitely strengthening. We're in this gap resistance zone. Huge volume that we saw back in May. That is the top of the gap. This is where we closed, and look at this heavy volume gap down, and then the reaction high came up into right there. So we gap down on massive volume, and we rally back, and we struggle, and then we go lower. So as we're coming back up here, this is kind of the zone that I want to watch to see if we can get through. We're trying to move through it today. We failed last week, but notice when we pulled back, we did hold the rising 20-day, and we've got a PPO that's rising. So I'm kind of interested here. I don't know. I wouldn't be pulling the trigger on the long side right here because I think we're at a major resistance area. But if we can break above 1250, that would be very bullish, especially if the volume continued to pick up. So I'm kind of short term leaning more bullish. Intermediate term, I'm watching, got one eye on this gap resistance area. So for now, I probably wouldn't do anything, but I do think it's an interesting chart. If we get a breakout, it could continue to run higher.
Okay, the next one is CME.
All right, CME. Sideways consolidating off an uptrend. So I'm most part pretty bullish. I mean, when I see a move like this, which is a pretty clear uptrend, and then we consolidate sideways within that, 170 to the downside, about 176 and change to the upside. We're right in the middle of the range. I don't see a trade right here, but I do like the overall pattern. I think eventually we're going to make the breakout to the upside rather than the breakdown. So either get it on a breakout, that would be my strategy, or on a pullback down closer to 170.
Okay. The next one up is Tandem Diabetes, TNDM.
Yeah, this one's on my strong earnings chart list. It's also got like a 99.9 scooter rank. Thing has been on fire. It's finally consolidating a little bit, which is a good thing. I mean, 6 months ago it was $5. It got up to 52. It really needed some consolidation. There were stocks like this, I think others like Funko, FNKO, that just absolutely took off. And I think it's a good thing to consolidate. The problem is that there's a pretty wide consolidation range. And actually, let me exit out of here. I'm going to shorten this chart just so we can see the price range a little bit better. Let's just do 3 months on this one. We know we got a serious uptrend in play here. So let's annotate here. And clearly the top is going to be up somewhere around 52.5, maybe 51.5 if you're going with closing price as opposed to an intraday high. And then down here, there's your candle body. But again, if you wanted to go all the way down to the tail, that's where the buyer stepped back up. And look at the volume that day, by the way. We were all the way down to 35, finished at 42.50. Clearly, there's a lot of buying down in that area. So as you get closer into this range, it's a volatile stock. So if you start buying at 39, you might find yourself at 35 pretty quickly. But this is the zone that I would consider accumulating the stock in with an eye on the high back up in the 52 range. I think it could use some consolidation, though. So I'd be sitting back waiting and seeing if I could get this just a little bit cheaper.
All right. I'll be interested to see if you like this one. I like it. And I know our styles are different, but I think you might like it too. NTR, Nutrien.
I already know I like it because it is on my strong earnings list and I've been watching it.
Well, I like
Yeah.
it now.
Yeah, I like it on the 20-day test. I mean, again, when you get a move up like this on heavy volume and that PPO is rising, you get a pullback and hit that 20-day. That's normally when I like to get it. I like to get it on the pullbacks, but we're getting a breakout now to confirm. I'm going to stretch this back out now a little bit. Oh my gosh, yeah, look at the triple top here. This looks really good on this breakout with heavy volume. So, yeah, I don't really have anything negative to say here. The only thing I would say is make sure that we get this breakout on the close. If we leave a tail up above the breakout level and come back down, maybe we have one more trip down to the 20-day moving average. But that would probably be about it. I'd be surprised if we see another move below the 20-day. I think this one is ready to go. And notice here was the volume, by the way, on the earnings news. Look at the gap support. I'm going to draw these lines in here too. Oops, don't need that. Right here, top of gap, and there's the bottom of gap. Look at these. Look at how when they come back down into the support zone, it holds. Now, that would have been scary, but that also, I talk about a lot of times, seeing a tail that goes down below the prior lows and you reverse back up, that to me is a signal that market makers are getting on board on the long side, because who in their right mind would buy on a breakdown? I don't. And I mean, technical buyers aren't going to buy when a stock is breaking down below prior lows. That's a sell signal. So who's buying? Well, those providing liquidity, which are market makers. So I love to get these reversals in these key support zones at prior price support and in gap support. We went all the way back up, tested the top of the range, pulled back at the 20-day, and now breaking out. I mean, I think the chart looks great.
Yep. I'm wondering if we should go buy it since we both agree.
Well, last time we did that, I know it was many, many months ago when we first started the show. I can't even remember the stock, but I know there was one that we both said, yep, this looks really good. And the stock went on and did really well. So who knows?
Yeah, who knows? That's, when you have two analysis processes doing that, giving you the same signal, I think that's interesting. FireEye will be our final one.
Okay, FireEye definitely strengthening. Look at the volume coming in. This is kind of what separates an uptrend for me. Are we just kind of, is it a little bit of a head fake before we go back down and follow that prior downtrend? Well, the volume tells me, because normally you don't get heavy volume on a move that's not going to last to the upside. Usually that's a sign of accumulation. So I like the stock. I do think we've got an overhead resistance area now that has been pretty formidable. We reached a high in June. We tested it again a week later, tested it again a month later, and now here we are moving back up to test it again. But I think we'll hold the rising 20-day on any pullback. So I think we're in a trading range of about $1 right now, 16.50 to the downside, 17.50 to the upside. And what I would really like to see from a long perspective is a breakout above 17.50 and get that volume moving again to the upside. I think that would be a really positive signal for the stock.
All right, perfect. There are the symbols that we just did, or Tom just annotated in the 10 and 10. Those will be up in the Market Watchers Live blog. Well, the Market Watchers Live chart list, but you'll find it in the Market Watchers Live blog. The link is right there at the top. All right, time for our final market update. Let's see what's been going on. All right. Well, most of the major markets opened higher. I think what's interesting to note, well, first of all, you can see the Dow and the S&P have come off their intraday highs, but both are still holding that gap support right there for the Dow and right here for the S&P 500. However, we're not seeing quite the same here from the NASDAQ, which really gapped up, had a great morning, and then has been, dwindling and moving downward ever since. OEX is still in positive territory, holding that gap support. But look at the mid caps and the Russell 2000. With the mid caps, at least we're sort of holding that support that we had on, looks like Friday's open back here. And you can see that we're holding that support at this moment on the S&P 400. But look at the Russell 2000, like I said, heading straight down, did not hold that support level that we saw here held so far today on the S&P 400. You can see Canadian markets gapped up on the open, came back toward yesterday's close. And at this point, after an attempt to get back up to those intraday highs, we failed. And we're seeing a bounce, though, off of Friday's close for the TSX. Treasury yields are up slightly here. We're reading now at 3.076. UUP is moving up. It's up about 6 cents, reading at about 25.32. Gold gapped down, but is starting to make a comeback to the upside, but still lower on the day at 112.55 for GLD. TLT is lower, gap down, picked up about half of those losses, got those back, but is now down, testing intraday lows. And finally, USO oil is on its way up. Started with a little consolidation above Friday's close and then took a nice burst to the upside, and currently, well, it looks like getting ready to set a new intraday high currently, and in this 10 minutes of trading that you can see. And that concludes the final market update. I'm going to pass it back to you, Tom, for a special study.
Yeah, I'm just going to take a look at the Russell 2000, and I'm going to stretch it out more on a weekly chart. So the top here, you can see this is the chart of the Russell 2000 over the past 3 years. And this bottom chart is how the Russell has performed relative to the S&P 500. And what we've seen is when we've gone into these periods, like right now, the Russell simply can't catch a break relative to the S&P 500. And of course, with the news today with U.S. and Canada and Mexico signing a new deal, or at least coming to an agreement on a new deal, I don't think that's going to help the Russell 2000 in the very near term. And as I mentioned in the seasonality study, the first 10 days, 10 days of October tend to be very weak for the Russell 2000 on a relative basis. So there's a lot of things right now in the short term lining up against the Russell. And we're starting to see it take a toll on the chart. We're down to the 20-day moving average. And I just wanted to point out that the last few times where we have seen the Russell 2000 underperforming the S&P and break below the 20-week moving average, we've gone back down to the 50. We did it back in January, early February when the market was weak. We did it last August. You can see that we were struggling relative to the S&P. We broke below the 20 and we went down to the 50 here. And then also back in October 2017, when we lost the 20-day moving average and we were losing strength versus the S&P. So I'd watch this 20-week moving average pretty close, which is just about 6 points beneath where we are right now. If the Russell can't bounce off of this 20-week moving average, I think there's a chance we go down to the 50 to open up October. And that would be another roughly 5% on the Russell 2000. And if you're like me, I've been trading a lot of these small caps. It's going to be very difficult to capture gains if the Russell continues to underperform. So that's why I'm watching this rising 20-week moving average pretty closely on the Russell right now.
Yeah, and somebody did mention in the chat room, why would the Russell be going down when the dollar is going up? But I know it's not a perfect reverse correlation there, or I should say tight correlation.
Well, I think there were two things really that was driving small cap outperformance when you look back at this chart in the first half of the year. I think one was the rising dollar. I think the other was just a lot of folks with all the trade fears and everything. I think you saw a lot of money rotating away from some of these multinationals and into the small caps. And now that we're starting to maybe get a little bit of this fear behind us, I mean, if you think about it, small caps probably are not going to benefit too much by the deal the U.S. signed today with Canada and Mexico. But I think some of the larger cap companies, the Fords of the world, those types of companies will benefit. So I think that there's a couple of different things going on here. And I think if we see an agreement between U.S. and China, I wouldn't be surprised to see the Russell take even a further dip relative to some of these small or large caps that were beaten down so badly earlier this year. So I still think longer term, I agree with the question. I do think the Russell relative to the S&P will follow that dollar. And I do think eventually it turns. I just think in the short term, we got an issue here. And I know it's not helping me in my portfolio.
Yeah. All right. Sounds good. Let's see. Let's go ahead and move on into the scooter report. I'm going to let you know which stocks have the biggest scooter moves going on. And then we'll look at different ways to find stocks based on the scooter moving that they are doing. Wow, that's a mouthful there. Okay, so I'm taking you to the member homepage here. Make it a little bigger. And of course, you should have all of these tiles readily available to you, and you can just select how many you want and how many data panels. I like the additional ones because I follow so much. But this is a data panel, and you can select top 10, ticker clouds, etc. And of course, the DP signals, which is usually what I have right there on top. But I'm going to go ahead and let's look at the scooters. And I'm going to take a peek at the large cap, mid cap, and small cap big movers to the upside. And, a lot of times these are making really powerful moves that day. And it may, you don't want to chase, but a lot of times you're going to find that, that there are some opportunities in here. So let's go ahead. I pulled up the large cap top up scooter movers, and we're going to look at the candle glance here. This is the way I like to do it because I have set up my own custom candle glance, which you can do too. Just go and set up the chart style that you'd like to see on your candle glance page, and then just name that chart style candle glance. And then you're going to forever have that whenever you come up with your candle glance, unless you, of course, choose a different style or redo your candle glance chart style. All right, so let's look at what has come up here on the top 10 big scooter movers. And of course, we did talk about Tesla, big gap down yesterday, and now it's already gapped back up to really where it was trading on Thursday. So we haven't seen much of a difference there. I suppose if we looked at that chart based on that PMO, getting that bounce right up above the signal line, you could make a case for this being, Tesla being in a good place for to see a move or a breakout above that 200-day EMA. There's that scooter move, and that's really, of course, due to that big gap down and then the following big gap up on the news. So I thought that looked interesting, Tesla. And then I'm just looking through here. I'm looking at the PMOs because that's, primarily what I go from when I do my studies and analysis. And then I'm also looking at possible chart patterns or breakouts. And given that, you've got a PMO buy signal here, and we now have a move above the 0 line on the PMO. Let's go take a look at this one. And one of the reasons, 20-50-day EMA positive crossover. We are starting to get a near-term overbought territory, but we know that it can travel between -6 and about 6. So it's not what you would call overbought just yet. I'd like to see a little bit better action here on the OBV, which is moving sideways. And I think you need that breakout above the 200-day EMA to be on the safe side, or maybe a move back down to test that 20. But XEC, Cimarex Energy, that one looks interesting on as a big scooter mover. The other one that was catching my eye, there's actually two of them. Let's look at Noble Energy. This one caught my eye. It has a really similar chart to RIG, which I am still holding on to right now. You've got the double bottom. It executed when it moved up above that, looks like $30.80. Once it broke above that confirmation line that you would draw straight through that double bottom here, right there at the W in the middle. So that would be your confirmation line. We got the breakout, and then it really had a struggle trying to break out from there. You know, the expectation is a move the size of this pattern. And, you know, we've made that breakout. The size of the pattern, well, let's see, about $2.5, $3. So add that to here, and that should get you up to that 33.50 area. Or what I would look for is a test of this gap resistance right here at about 33.50. So I think this one has an opportunity to move up to that 33.50 level. Look at, there's that scooter move. And PMO's been on a buy signal since really when we started, right before we started this consolidation zone. So this one, I'm sort of wishing I had picked that one up earlier on my scans. I'm sure it came in on a scan. All right, and the other one I see here in the large cap scooters, this one right here, National Oil Well. And what caught my eye was, of course, that PMO is bottoming and has turned up. We already know it's a big scooter mover because, of course, that's what this candle glance shows us. And I see in the very short term a little double bottom here. And it looks like we've actually, if you look in the thumbnail, we have broken across that confirmation line. And so then we should expect in the very short term a move about the size of the pattern. And I'd say that gives you, well, I can't do the math in my head too. $1.50 maybe rise here. So you can add that to the breakout level. And that should really put you up here to test overhead resistance, I'd say right here at that top we had back in September, that high. But I could see this moving up to test that $47 level. So I would keep an eye on this one. It is on a 2.5% move to the upside. We may need to see a little bit of a back off on that. But if it can hold and trade above that 20-day EMA, I think this could be an interesting play as well. All right, so those were the ones in the large caps as far as scooter rankings. Let's move on down to the mid cap scooter movers. Again, top up, the biggest scooter movers right now in the mid caps are right here. I'm going to put it in a candle glance, and let's take a look at some of these. Now, I can tell you on a few of these, I really wouldn't be interested just in, looking at how they trade. I know that some of these are, when we start looking at these mid and small caps, you need to be aware sometimes the volume isn't really all that high. So you might be subject to some stock manipulation just based on that. But I'm looking at these charts, and let's see what is really poking out at me. Not too many, because I wouldn't be interested in trading those. This has an interesting look to it. Shell Midstream, SHLX. And I say that this one has an interesting look because I see that declining tops trend line. Take that right here, and I'll make it skinnier. I don't need an arrowhead, and we'll make it green. Okay, so I'll put that right in there. And you can see we are just now getting the breakout from that declining trend. And we had tested successfully the $21 range. We are still sitting below the 50 and 200-day EMA. So you always need to have some caution there, because it's really in a bear market configuration. You should always kind of expect the bearish conclusion rather than the bullish conclusion when you see a setup like that. But we did get this breakout from that declining trend. It is now above the 20-day EMA, trading above that. So this one looks pretty interesting, SHLX. And let's go ahead and take another look at what we have here. Nothing else really is coming out at me. So this one maybe, Tech Resources. Let's take a peek. So see, I see this double bottom and it executed, but it didn't fulfill the pattern. It came back down. And so that's what leaves me a little leery of this particular chart. But then we can also see some very strong support here at that $24 level. Came down, left a tail as Tom talked about, right on, testing below that area of right below the 20-day EMA, came back up. It's now trading above the 200-day EMA. You can see that we're getting, the PMO had kind of sucked in a few people here as it turned over, but now it's turning right back up. And I do see some upside potential here. The only reason I was hesitant was the fact that we didn't get the fulfillment of that target on the double bottom. But, maybe it's time to give it another try here. All right, and then let's go look at the small caps for scooters. And these are our top up movers. And I'm going to select Candle Glance. There we go. This looks a little blurry to me. If it looks blurry to me, it probably looks blurry to you. There we go. Okay, so here is our Candle Glance of the top scooter movers in small caps. So now we want to take a peek and see what might be interesting here. Well, I can tell you right here, CLDR Cloudera, I would give the heave ho right away. I've got a PMO sell signal and oversold or overbought territory. Certainly not something that I would be looking at as far as my investment strategy. This one looks interesting. It already has a 4.5% move, though moving up off of that. Let's see here. Let's look at that a little more closely. I suppose you can make a case for another double bottom over here that's executing in the process of doing so. This is an oversold PMO getting ready to have a crossover, and that really nice move on the scooter does give you some, bullish feelings, I guess, about this stock. It's showing you what you need to see, that internal and relative strength is increasing. But we do have a 4.5% move. We did trade above that 200-day EMA. I personally probably wouldn't get involved in this until we do see a little bit of a pullback to the 20-day and a 5, maybe 20-day EMA positive crossover. That would give me a short-term trend model buy. So that would make it something I would consider. Right now, ORRF, I'm not particularly interested in, but it did have an interesting looking chart just by, taking a peek at what we're getting right now. XOG, and I feel like somebody even talked about this, or maybe I already talked about this one. That does look interesting. PMO buy signal coming in. You can see we're getting ready to come up and test some overhead resistance here at about 1250, and even that would be a pretty nice move to come up and just test that 1250 area. But look at this pretty buy signal in oversold territory. We already moved up. It looks like consolidated just a little bit and now are breaking out again. You could make a case for a flag here, and that would give you a move of about $1.50. So that should put us at about $13, which gives you, right there at that overhead resistance from that low in July, and even back here, I would say, with that tops in March. So I think this one looks very interesting, XOG. And then let's go back and see what else is there, and then we can move along. Well, gosh. I guess this one's trending. The PMO has been trending a little bit upwards, even though we're looking at a consolidation zone. Kind of interesting, PMO just went into positive territory. Obviously, you're going to see the big scooter move because that's what we're looking at, are big scooter movers. Had the bull kiss. So I think there's some opportunity possible here. You could probably make a case for Well, it looks more like a trading zone here. So I would look for a move up to that 200-day EMA resistance level and that top back here in August. I think it could make it up there based on that move in the scooter. And then, of course, the PMO is looking a lot more positive. So that's what I had for the scooter movers. Here's the summary slide. Let you see all of the different symbols that I did look at. And I moved, if you recall, we started with looking at the scooter movers on the member homepage. And then I just went through the large, mid, and small caps in candle glance. And from that, I could find interesting stocks to look at, maybe add to watch lists or even consider for purchase just by using the candle glance. Then I could pick out a PMO and crossovers and that sort of thing that looks more and more interesting. So that's just one more way to use the scooter. So, all right, that is it.
Yes.
Time to close the show.
Yeah. Well, we did have a, I know we talked earlier about the fact that, Amazon has been such a monster. By the way, I looked up Amazon right now has got a $985 billion market cap. So it needs 15 more billion to join Apple as the second company to reach that 1 trillion market cap level. Yeah, it's pretty amazing.
Yeah, and when I ran my scan, like I said earlier, it did come up because you can see the PMO has been making its move to the upside. It's almost at a buy signal. So I think this is, if you wanted to get in on Amazon, this might be a good time to do that. Now, there was a question about Amazon in the chat room, and they wanted to, do you think a stock that is drastically trending up, like Amazon, I suppose it's I don't know if it's drastically moving up, and it pulls back to the 200-day EMA, is it still a good candidate, or is it technically damaged in your point of view?
Well, I'm a short-term trader that looks at momentum. So, I mean, a stock that's even down at its 200-day moving average is probably not one I'm going to be interested in. But it's probably not in a very good uptrend if it's down at its 200-day moving average. I mean, it takes quite a bit of selling. I mean, if you look at Amazon right there, that's right. I think that was your 200-day right there at the bottom. They're correct.
Yes, that's an EMA, so it's probably higher than regular moving than a simple moving average. But
yeah, so I mean, but the Amazon would have to lose 400 points to get down to that 200-day moving average. So that's my point. By the time a stock does that, I'm not going to be interested in it. I think from a momentum standpoint, I think you want to, at least I want to avoid stocks like that. I want to find stocks that are trading above their 20-day or maybe 50-day moving average. I don't want to see them testing their 200.
Right. Well, I'd have to, I don't like stocks that are below their 200-day EMA anyway. I mean, that's just me. But, if you get the pullback, if you've got, the right chart pattern, if the PMO is now turning back up after it's pulled back to that 200-day EMA, if it can hold it, then, I would think that it's, wound itself down and, we're in good shape. So.
Yep, absolutely. All right. Well, this is the end of another day to start another calendar quarter. I tell you, it's a pretty crazy day for sure. I mean, we've had huge move up, especially in many of the large cap Dow and S&P stocks, and not so much for the small caps. But here's your upcoming schedule for the rest of this week. I want to thank everybody for joining us today. Please remember to complete that survey as you exit. We do love to get your feedback. Hear what you think of Market Watchers Live. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Monday afternoon, everybody, and hopefully see you back here tomorrow. Happy trading.